Welcome back to Super Prime UK. Good to see you, James. How is the summer going? How are you doing?
Yeah, really good. Thanks, Rob. How about yourself?
Yeah, really good, really good.
So just to kick us off, Super Prime. So what's been happening in London over the summer? There continues to be huge speculation around a lot of the ultra high net worth individuals leaving London and the UK. One piece of sort of prime property news in London, we've got the new listing, £250 million, the old rectory over in Chelsea, which has recently come to the market. So a real sort of marquee house, completely unprecedented 2-acre garden, and a real trophy asset for someone who is looking for a home of that sort of price tag. Property was acquired in 2001, Rob, for 37 million. So since that time, quite a dramatic uplift in terms of what they're looking for on the asking price. But again, highlights that super prime properties are becoming available. They are transacting, and there are sales happening and agents behind the scenes, and not on your typical Rightmove on the market property portals, which you might see. So
everyone loves a good trophy asset, James. Let's see where that one goes.
That's it. And Rob, in terms of the this end of the market, generally it's cash transactions. Have you got any other data which highlights that?
Yeah, we've got some good data. We've been doing some good research. A nice trend on the back of interest rates and borrowing increasing, like we shared with you in our last show, and slowly but surely from a high of 75-80% of all super prime transactions being cash transactions, now there's a bit of a return to the mortgage-led transaction, and we're seeing that rate drop currently to around 70-72%, and we can see if this trend continues as we go into 2027, I think that's going to come down to around 65% cash transactions against mortgage-led transactions, and that's something we've been talking about a lot over the last year or two. So a real change in strategies in terms of leverage and acquisitions in the super prime space.
Thanks, Rob. And I think, like you mentioned there, we're starting to breach the threshold of affordability on terms of the base rate now coming down to 4%, lowest in over 2 years. So some positivity, not just for the super prime echelons of the market, but also throughout, which are going to filter down to those which are a lot more sensitive to those mortgage costs.
Yeah, I mean, that's what everyone is waiting for and what we've been waiting for. The market from top to bottom moves on affordability debt borrowing, and if there's going to be another quarter of a point, half a point this year, and we're going to end up at that golden 3.5% base rate, hopefully, we're really going to see the markets move and gross lending, like we discussed in the previous show, grow and increase. So great data on that. Mortgage lending continues to improve, and the reduced interest rates and the greater affordability, or the flexibility on lending and affordability, will further support that space.
Thanks, Rob. And as such happens after these rate cuts, there's been a little bit of a price war between some of the banks. HSBC in particular have cut their rate for a third time in 2 weeks recently, just undercutting some of the other lenders in the market, and often by as little as 0.01%. So just to have that cutting edge against some of the other lenders. And I think that's something that brings some positivity, Rob, in terms of when there is that competitiveness to be the lowest price in the market, and just forcing some of the other lenders' hands just to aid that competition.
Yeah, that should be the story of the remainder of 2025, as and when everyone returns from holidays and schools go back, and we see a real strengthening in the markets, as always, mid to end of September. I think the last quarter of the year, notoriously the strongest performing, will see some aggressive lending from the banks and a continued competitive marketplace for lending.
Yeah, if we take the average 2-year mortgage fixed rate mortgage product. This has dipped below 5% for the first time since the Liz Truss Prime Minister mini budget in September 2022. So I think that's also a very encouraging spot that we're now starting to stabilise in the UK. I think the most competitive rates out there with very low LTVs are about 3.7 at the current time, but that's fluctuating day on day.
I think what I'm really interested to see, especially in super prime, is that broadly the market's a 3.3 billion transaction market year on year for the last 12 months, on the back of a really strong Q4 in 2024, and really interested to track the data this year and see if Q4 can perform anywhere near it did in 2024, and that will be the defining moment for Super Prime 2025 if it can match the Q4 figures from last year.
Thanks, Rob. And just focusing on London, we've had the last 5 weeks with 100 plus sales, which isn't necessarily what you would have anticipated at this time of year, sort of end of July, August, typically quieter months in the UK and London property markets. Interestingly, if we analyse the months between May to June, there was no 100 plus sale weeks. So really notable those last 5 weeks of increased activity there, with the last week of July being the strongest week since the early March. So some positivity there in terms of the property market in London, which you may not hear in the press currently.
Yeah, what we're hearing from the agents is that the buyers that are out there, particular looking for certain product, a lot of turnkey is performing exceedingly well, with some premiums being paid and some opportunities for foreign high net worths, ultra high net worths to enter into the market with maybe properties come to the market that haven't been in the marketplace previously. So there are opportunities, and turnkey performing very well.
And just at the other end of the spectrum, Rob, I think if we take holistically the UK property market, there has been fairly subdued house price growth this year, with moderately lower mortgage rates, which have helped to boost the affordability across the UK. And the price of a typical home now is about 5.75 times the average income. So it's well below the all-time high of 6.9, which was recorded in 2022. And in terms of what Nationwide are commentating in terms of their analysts in this space, is that the affordability is becoming much improved for the UK if we take it holistically as a whole, which again I think is encouraging for the market to be able to function. If we look at some of the house price indices, I think there's slightly conflicting views in the market currently, with a number of the notable analysts which provide their HPIs. Some are recording small percentage growths. Others are recording some small retractions in the market, which I think highlights, Rob, the nuanced nature of the market that we find ourselves in. Like you alluded to there, some of the turnkey houses performing very, very well. And I think buyers are willing to pay a premium for some of those turnkey houses, maybe more lateral properties, although buyers will still try to seek some value. And if a property is deemed to be overpriced, these properties very often we see it can become quite stagnant, and it really impacts what their achievable sale price ends up to be.
And finally, James, Premier League is back, and game of the weekend we've both got a bit of interest in, haven't we?
Yeah, Sunday. So Man United versus Arsenal. New signings going to be on show, both sides. Arsenal don't have a great record at Old Trafford, but are going to be huge favourites going into the game. United's leaky defence is going to be a definite problem. We'll see. I sort of think a 2-1 Arsenal is probably my prediction for that one.
Hope you're right. I probably see a score draw, but I hope you're right, James.
Yeah, and then
you're right.
Liverpool returning against Bournemouth Friday evening. Quite a quiet performance, Mo Salah last weekend in the Community Shield. Often scores high sort of fancy football points opening day historically. So that might have altered some people's picks for the weekend.
I think Liverpool are looking strong. They've gone very aggressive in the market and are currently the favourites. So let's see what the season holds for all of us.
Probably the team to beat this year.
Yeah. Good luck at the weekend, James.
Good luck.
Thanks, everyone. Hope you enjoy the show. Great data today. Great insights, James. And we'll see you all after the holidays. Thank you.
Thanks, Rob. Thanks so much, everyone.